You know, our world is going cashless faster and faster. And that raises a huge question that came up at the World Police Summit. How in the world do we fight money laundering now? Well, one potential answer is getting a lot of buzz: central bank digital currencies. So what's the real story? Let's dive in and find out. So let's get right to it. Are these CBDCs really the magic bullet for financial crime? That's the huge question we're going to investigate today. We're going to break down all the evidence and see if this new kind of money is really the ultimate solution that authorities have been looking for. Okay, so first, let's get the lay of the land. We're living in an age of clicks, taps, and digital transfers. And while that's super convenient for us, it's also a golden age for criminals. Trying to follow the dirty money through this incredibly complex digital web, it's a massive and frankly a growing challenge. To even begin to understand the proposed solution, we have to really get a handle on the problem itself. So let's deconstruct the evidence by taking a close look at all the different types of money that are in play right now. Basically, our financial world is built on three main pillars. You've got central bank money, that's the actual physical cash you can hold. Then there's commercial bank money, that's the digital money sitting in your bank account. And finally, you have non-bank money or e-money from places like PayPal or other payment apps. And here is where it gets really interesting. When you line all these assets up, just look at that last row. Anonymity. Physical cash, crypto, and NFTs, they all offer it. The money in your bank account, though, not so much. And CBDCs? Well, that's the big question mark. It could be designed either way. Also notice the trust mechanism. Crypto is diffuse, decentralized, while pretty much everything else, including CBDCs, relies on a centralized authority. And this visual, wow, it just perfectly captures that balancing act. On one axis, you have your trust in the good old central banks. On the other, your trust in new digital tech. See, traditional cash is all about trusting the bank. Cryptocurrencies, they're way over on the other side, totally dependent on technology. CBDCs are trying to land right in that sweet spot in the middle, using the new tech but with the full backing and trust of a central authority. This brings us straight to the core motive in our whole investigation, the incredibly important difference between two concepts that people confuse all the time: anonymity and privacy. So, when we peel back all the layers, what is this really all about? Is it about pure, total anonymity? You know, the ability to be a complete ghost in the system, totally untraceable? Or is it actually something else? Something a little more subtle? Is it really about privacy? The basic right to control who gets to see your financial life and for what reason. And trust me, understanding this difference is absolutely everything. Because once you start breaking it down, you see just how complicated this gets. A buyer might want to be anonymous to, say, dodge taxes, but they have to share their identity to buy a car or a house. A seller might want to hide data from competitors, but they also want to track their customers. Even the tax authorities have to walk this tightrope between protecting a taxpayer's privacy and, actually stopping tax evasion. Everybody's got competing interests here. All right, so we've got the players and we've got the motives. Now it's time to put our main suspect right under the microscope. What exactly is a central bank digital currency? In the simplest terms, a CBDC is just the digital version of a country's cash. Think of it like a digital dollar or a digital euro. But here's the key difference. The money in your bank account is technically a liability of your commercial bank. A CBDC is a direct liability of the central bank itself, just like that $5 bill in your pocket. So why is basically every government on the planet talking about this right now? Well, there are a few huge drivers. They see CBDCs as a way to bring more people into the financial system, to push back against the rise of private cryptocurrencies, and to make sure their own currency stays important on the world stage. And let me be clear, this is not just some theoretical idea. Countries all over the world are already deep into this. This map shows you. Some are in the early research phase, others are already running pilots, and a few have already launched their own CBDCs. This is happening, and it is happening fast. Which brings us right back to where we started. We've laid out all the evidence, so what's the verdict? Are CBDCs really the cure-all for financial crime that we've been waiting for? Well, it's definitely a mixed bag. The massive advantage for law enforcement is right there: traceability. Every single CBDC transaction could, in theory, leave a perfect audit trail, making it way, way harder to hide dirty money. But On the other hand, there are huge challenges, like making sure the currency is stable and managing the insane amount of infrastructure it would take to process literally everything. But here's the real kicker. This quote nails the heart of the problem. Financial crime is incredibly adaptable. The criminals behind it are just so nimble. If you ban one asset or tax another one, they will just instantly pivot to something new. They always find another way. So the bottom line is this. CBDCs will absolutely give authorities powerful new tools to fight financial crime, no doubt about it. But they are not a silver bullet. The timeless cat-and-mouse game between the criminals and law enforcement, it's just going to continue, but on a whole new, much more high-tech battlefield. And that leaves us with one final, pretty unsettling question. In a world where new, completely anonymous digital assets can pop up almost every single day, is it possible this high-stakes financial chase will ever truly have a finish line?